Hi traders, welcome to the new weekly forecast for the trading week beginning on September 30th. Now as we are entering into the new trading month, so first week is always crucial for the markets. We have employment reports from the US. So coming Friday, we'll be having NFP numbers out in the market. Now dollar is sitting at a very crucial level. So let's dive into the charts, find the dollar levels and the other currency pairs which will be highly impacted with the dollar movement. So let's start our analysis with dollar index and I'm on to daily chart right now. In fact, I can go to weekly as well. So what I've done here, I need to clean my chart first. So what I've done here, I have applied multiple fib extensions in the downward direction, which will give us the magnet zones. I'm going to do it all again. So starting from the highest point, connecting to the first low created on the weekly chart, and joining back to the lower high. I need to do it one more time on the lower high, the next low created and the next lower high formed. Now if you notice, we have two fib extension lines coming very close to each other and creating a confluence zone. So this is the zone I'm talking about. So we have marked this zone as the upcoming target for dollar index. Now I'll move down to daily chart. Now based on daily frame, I have the opportunity to apply one more fib extension starting from the swing high on daily, connecting to the low and again the next lower high, that's daily lower high. And we get some more confluencing levels here, fib extension levels. So here we are right at the confluence zone and the previous confluence zone was here. So currently we are sitting at the confluence zone, but if you notice, the price has not found support at 100.26. In fact, the current price is lower than 100.26, which means the current market price for dollar index is lower than the support zone. Now moving down to 4-hourly chart and aligning the chart. So here I do not see any signs against the bearish movement. In fact, MACD is clearly bearish and MACD lines have crossed and they are again running bearish. So the momentum is bearish based on daily, 4-hourly and the weekly chart. Coming down to hourly chart now. Only on the basis of hourly chart, I have found that the sellers have created a swing low here and the market has bounced back. But currently we are still below this important fib zone. So if buyers have to take over dollar, then we need a break above 100.51. So dollar index should rise higher than 100.51. If not, then it is expected to continue downward. So in the coming week, as it's NFP week, I'm expecting that dollar may bounce to somewhere in the middle of the zone or maybe to the top of the zone, the resistance zone, and then it's gonna roll down again. So this is the setup for dollar index. Again, on the basis of falling trend line, the buyers need to break above the falling trend line. So either this should happen. So either they should directly break above 100.51 or they should break the falling trend line in order to regain the control on dollar. So I'm expecting dollar index to remain weaker. Now as dollar remains weaker, so most of the currency pairs against dollar, okay, they will remain bullish. And the best setup I have found in Australian dollar versus US dollar. Now based on the weekly chart, here we've got the pattern of higher lows. So Australian dollar versus US dollar is continuously creating higher lows and higher highs. So in fact, it has surpassed this resistance area. Now again, I'll be applying multiple fib extensions, but this time I'll be doing it in the bullish direction. So I'll start from the swing low. I'll connect the lowest point to the high, connected high and the higher low. I'm going to apply one more time to look at the extension confluence levels. So same process being repeated, but this time it's being done in the bullish direction. So we have a zone here coming from the 2 fib extension lines. Now I can move one more time. So here we have next higher low. So I'm applying again the third time. And based on the next one, I've found that we have a confluence of support at 6736, and the next zone is around 7204. So in short, if Australian dollar USD continues bullish, so first it has to clear the resistance at 0.6930. If it clears the resistance at 0.6930, it should bump back for the retest, and it's going to rise again, and it's going to move to the first level should be 0.7109, followed by 0.7204, and momentum is ultra bullish. So MACD histogram, MACD lines, they are clearly rising without any signs against. Now I'm moving to daily, and on the daily chart, no signs against. MACD histogram clearly rising. MACD lines are also rising. In fact, I have a new higher low pattern, and where I'll be applying the next fib extension. Now using the daily chart, I just need to change the color of the fib extension. So this time I've applied blue colored lines on the daily chart, and here we got a zone which is in between 6931 to 6957. So currently we are in the resistance area. So I won't be surprised if on the lower time frame we get some bearish divergence here. Moving to 4H. Now yes, on the 4 hourly chart we got the bearish divergence, and if we get some correction here based on the weakness in the buyers, now this divergence means the buyers are exhausted. MACD histogram has given divergence, but the MACD lines, they have not yet completed the divergence. So once the divergence gets completed, I'll be expecting some short-term correction here, pullback, but I'm expecting that after the pullback, the buyers will regain the control around 0.6736 or 0.6750, and they should continue and take it to the next higher level. Now moving to 1 hourly chart, and yes, even on 1 hourly chart, I've found bearish divergence between the last two highs, and as dollar index is at a crucial support level, although it's looking bearish, but a correction is possible. So if dollar index corrects in the upward direction, then the AUDUSD will correct downward, and any correction should be taken as an opportunity to buy. You might get first opportunity around 0.6840. If it fails, then the next one should be around 0.6750 as a psychological number, or to be precise, around 6736, and look for buying opportunity. Now moving to 15 minutes. Now on 15 minutes, I do not see any bearish divergence, which means there could be one more push to the next zone which we have marked. So before moving down, AUDUSD can go to 0.6931 or slightly higher. So I can say around 6957, and then it would correct in the downward direction, maybe around this area. In short, Australian dollar US dollar pair should be bought on the dip. I'm just going to align here. Yes. The next instrument is Canadian dollar versus Swiss franc. Again, I'll start from the weekly chart. Now here on the weekly chart basis, I need to explain again. Same process applied. So we got higher highs with bearish divergence on MACD lines and even on MACD histogram. So this bearish divergence brought back the sellers in the market, and the market starts rolling down. I'm going to use fib extension in the downward direction. So I'll start from the highest, and here we got the first completion of the cycle. I'll apply it with the lower high, And now if you notice, the current market price is lower than 0.618 fib extension level. So 0.6325 is now acting as resistance. Applying fib extension in the downward direction one more time, and this time I'll start from the next one. I'll apply to the lowest point and the next lower high. And yes, we got the confidence, so I just need to change the color here. Yes, so the blue line and the red line, they're exactly overlapping here. So 63.25 is now definitely a major resistance in the market. And the next upcoming level is 0.6102, followed by 0.5959. Moving to the next lower time frame, that's daily. Same story. I can use multiple fib extensions in the downward direction. So this is double top with massive bearish divergence. The BOS completed, first push down, correction completed, third leg completed, and now we are in the fifth wave down. So here we can apply fib extension multiple times on the daily 5-leg structure downwards. So starting from the high, connecting to the low and next lower high. This time we'll use 2x thickness, and one more time on the longest wave downward, starting on the daily. Now let's find the magnetic zones here. So the next magnetic zone is here. So if it keeps rolling down, I can expect it to reach 0.6069 on the basis of magnet created here. And the next one should be around 0.5959 to 0.5920. So these are the upcoming downward targets. Moving to 4-hourly chart. Now if you notice, on the 4-hourly frame, market rises, bumps into the major resistance zone and crash downwards. So momentum is ultra bearish on the 4-hourly chart. No bullish divergence, no signs against. Connecting to 1-hourly chart. Now same story on 1-hourly chart. The 1-hourly chart starts printing continuously lower highs and lower lows, and the bearish momentum picks up. No divergence, nothing against in the bearish momentum. So we might get some support here, and if you get a bounce, the bounce should be taken as an opportunity to sell for the upcoming levels, which are derived on the basis of duplication of fib extensions, that is magnet zones. Now the next instrument I'm going to talk about is NASDAQ. Same story, I've applied multiple fib extensions, so here I'll keep it short. I'm not going to repeat the entire process. And based on multiple fib extensions, the first magnet zone is here, so which is now acting as support. So 17,450 is a major support, and the next magnet zone created was around 19,435 to 19,665, and the current price is higher than 19,665. So in the coming week or in the coming days, if you get an opportunity, if NASDAQ moves downward, then the levels around 19,635 should be taken as an opportunity to buy. Now when I've applied fib extensions multiple times on the lower time frame, I got another magnet zone in between. So that's around 20,276 to 20,416. And this zone is right now acting as resistance. So here we are at resistance level, and I can see that the market has stopped. NASDAQ instrument has stopped exactly inside this resistance zone, and I'm waiting for the pullback, so that the pullback should be bought because the higher time frame is still bullish. Now the next magnet zone is around 21,099, or the round number of 21,100. So I'm expecting bullish behavior. I'm expecting a bullish bounce once it bumps into 19,435 to 19,665, And from this zone, I'm expecting NASDAQ to move towards 21,500. Now I'll also use the rising trend line here. Now I'll be connecting from this low to the new higher lows. So same story, if we get a pullback, this would be also the perfect retest of the rising trend line along with the retest of the support zone, the magnet support zone. And once it breaches 20,276, a retest should be taken again as an opportunity to go for the next magnet level around 21,100. So in short, any opportunity, any dip should be taken as an opportunity to buy. Moving to 4H. Now here on the 4-hourly chart, because we are right now in the magnet resistance area, so this is creating some bearish pressure, exhaustion in the buyers. I can see higher highs being formed with bearish divergence, but the BOS is not yet done. Once you see the BOS level being breached, you will find NASDAQ going to the next support zone of 19,665. And moving to the next lower time frame is 1-hourly frame. On the 1-hourly frame, I found that NASDAQ false breaks above this resistance area, dives down, bumps again for the retest, and now starts rolling down. And the momentum is bearish on the lower time frame, but the higher time frames are ultra bullish. So I'll be applying fib retracement on the 1-hourly frame. I'll start from the lowest point of 1-hourly chart, which is also touching the rising trend line, the diagonal one, and I'll connect to the highest point. So once we have connected fib retracement on the 1-hourly chart, the first fib retracement level is 23.6. So that's the 20,000 mark. And once it breaches 23%, we can expect it to go to the next level of 38%, which is very close to our magnet support zone. And most likely it should hold, and we should look for buying opportunity around 19,435, 19,665. So this is the area to look to jump into the bullish trades. And finally, I'm moving to gold. Now here, same story, I've applied fib extensions on the gold chart multiple times. I'll do it one more time. So this time I'm going to daily chart instead of weekly. And here I've started from the nearest, this is the low point. I'll pick my first extension here. Done. I'm going to use one more time on the next bullish cycle starting here. And we got the magnet levels here. So here I'm going to mark the support zone, which is between 2491 to 2542, and the resistance zone is between 2650 to 2702. Now on the basis of MACD, there is no bearish divergence and there is just a pause in the bullish momentum, but no bearish divergence. So everything looks bullish. I'll also apply a rising trend line here. So gold remains above rising trend line, bumps into the resistance zone, gets some resistance here. So in the current week, we have seen that after reaching the highest price point of 2685, gold has taken some correction on Friday. Now we can apply fib extension one more time on the last daily bullish leg. And I'm going to change the colors to red here. Now I'll be following the new level. So here, if gold starts correcting, then 2576, the previous target, which I've been saying for past many months. So 2576 was completed, and now because the current price is higher than 2576, so 2576 is going to act as major support for gold. Now moving to the lower time frame, that's 4-hourly chart. Now on the basis of 4-hourly chart, if gold keeps continuing downwards because we have some bearish divergence here on the histogram, but it's a continuing type divergence which is generally not very strong. So if we get bearish momentum picked up in the coming days, then we can expect gold to reach 2576 and bounce back. I need to apply more Fib extension levels on the lower time frame to get the levels in between 2576 and 2650. So how we can apply, we have, yes, so we've got the new 4-hourly bullish cycle which is starting from here. I'm going to mark the new waves, bullish waves on 4-hourly. Okay, it's giving the same level duplication, so I'll pick the next one here. Yes, so above 2576 we got 2597, and applying for the next one, we've got 2626 in between. So if it keeps moving downward, the important support is expected around 2626. If 2626 is breached, then 2597, and the ultimate support would be around 2576. But I do not expect a severe pullback in gold, reason being dollar index is not picking momentum. So dollar index continues to be weaker, which should be the bullish case scenario for gold. So here on the 1-hourly chart, I have noticed bearish divergence formed on MACD lines and MACD histogram, followed by lower highs and lower lows. So we can expect gold to bounce back to 2667, which is a major level. I've also announced this level in the Telegram channel, and it will find a resistance. It will find resistance, and with the perfect retest around this area, we can expect short-term continuation towards 2626. And once we get bullish divergence around 2626, take it as an opportunity to buy. If it keeps rolling down to the next level, then 2597, and ultimately we can expect the bullish bounce coming back from 2576. And if it breaches 2667 prior to moving down to 2626, then the retest of 2667 or 2650 should be taken as an opportunity to hold it for the next level of 2702, followed by 2720, which I've already announced in my Telegram channel in this week. So short-term plan could be bearish for gold, but not ultra bearish, only small time correction. Ultimately, the long-term plan is still bullish. So the important levels have been announced. We have identified 2667, 2626, 2597, and ultimately 2576. So this is the plan for gold and other instruments for the current week. Have a nice and profitable trading week ahead. Bye-bye.